So, you know,
Yeah, go ahead.
you know
Good
the
afternoon.
like right now
Fine, thank you.
the strength is on JPY. The type is call, which is not the right one. What I'm supposed to be looking for is a put. So when
Okay.
this is accurate now, where I'm having the what will I call it, is a challenge is that
Okay.
whenever I set I'm coming,
Okay.
coming, so let me stretch the screen.
So what you can also do is, okay, go ahead. Just go ahead.
Uh,
So you can just double click the first screen. So it's gonna make it to be
okay.
it's gonna show only that screen. Then you can, yeah. And if you want to take it back, you
Mhm.
take it back as well.
Okay. Okay.
Yeah, good.
So okay. So right here now, when I come here,
Hmm.
what I do is it's giving me um the strength here is that JPY is stronger than USD. And what I'm
Yep.
waiting for is a put.
Yep.
So when I put a line at this resistance that
Resistance.
it has
Okay.
come up here,
Mm-hmm.
the resistance has come up here.
Okay.
There are times when because what I was told was at every resistance line I see here
Okay.
is where I should put this line on.
Okay.
So at times if I should set it, the market doesn't react at the line I put. It reacts at the closer one. And when it reacts, it doesn't give me the 4 points.
Okay.
At
Okay.
times it's always three.
Okay.
Because
Okay.
what I usually do is I've set this one here, I come here like this other one here,
All
I
right.
set one also here,
Okay.
because what I'm looking for is a sell.
Okay.
I set that one there,
Okay.
pick another one because they're like there's another one here
Okay.
and
Okay. Good.
another one, that final
Okay.
one, which is this one here right
Okay.
now.
Okay.
So
Nice.
at this point now, but if I need um 4 confirmations.
Okay.
Oh, it's strong.
Okay.
It's
All
very
right.
strong. So I need the 4 confirmations here.
Okay. Okay.
But at times the confirmation doesn't, it's not always complete.
Okay.
I always get three, I don't get four. And I
Okay.
don't know why I'm not getting the four.
Okay.
Because at times I can get the strength, I can get the type,
Mm-hmm.
which is two. I can
Okay.
get resistance, which is three.
Okay.
But I could get only, at times could be only stochastic and RSI.
Okay.
They don't always align. That's why I'm having challenge with the stochastic and RSI. That's actually where the main challenge is.
Okay. All right. Very good. Very good. All right. So let me shed some light. Right. So
Okay.
yeah. So you can stop sharing and yeah. So Wumi, are you following? Did you get what his questions were so that I
Yes,
can? Okay. Good.
yes, but I don't know why. My thought is,
Mm-hmm.
why are we looking for a sell then when cash trap is asking for a buy or indicating a buy?
Yeah. Good question. Good question. So let's see. All right. Let me share my screen here. Now I'm gonna answer everything at once. Okay. So Abayami, do you have your trading view?
Yes.
Okay, good. So let me open Hourglass as well. Okay, good. So normally, when you're trading, okay, when you're trading as a trader, basically what we're looking for right, is we're basically trading off of support and resistance, right?
Yeah. Yeah.
Price does things like this, goes up, comes down, goes up, touch here, come back, you know, touch here, come back, touch here, you know, like that. Sometimes it continues like this, it pulls back, it comes back, you know, comes back, pulls back, and it goes down. And if it's going to go up as well, you know, it goes up, pulls back, goes up like that. You know, it doesn't just move in a straight line. Good. So having said that, right, what we're basically doing in everything in all this grammar is we are selling at resistance or buying at support. Okay. This is another support here that was previously resistance. This is another resistance here that was previously a support here. Right. This is resistance that was previously support. That's basically what we're doing. Okay. So when you understand market structure, this is regular market structure, and you would understand regular market structure as time goes on. The knowing is in the doing. And that's why you see sometimes, even when Matthew Teya takes a trade, he goes off of technical analysis. The currency strength meter might not be in, you know, proportion to what the arrow is calling, but he's going to tell you that he loves the trade setup because he's going off of technical analysis. So having said that, but before you get there, let's go with, of course, the point system and the things that you really need to, you know, do to get you started and get you to the next level. So having said that, let me take all this out, and I'm gonna bring this one back up here. Good. So you use USD JPY. This is USD JPY. Okay. So the first thing is, of course, we want to look at the currency strength meter. It has to, that's 1 point. It has to correlate with the arrow, which is 2 points. The third point is it at a support or a resistance, right? That's the third point. And is it at either probably maybe at the Bollinger Band, upper Bollinger Band, or lower Bollinger Band, or middle Bollinger Band, as the case deem fit. And we also need to know how far with our stochastic and our RSI.
Sorry to cut you. I'm sorry. Did you say the arrow is 2 points?
So arrow, so currency strength meter and arrow, if they correlate, so that's 2 points. Yeah.
Thank you. Thank you.
Yeah. No, you're welcome. So the reason why you don't want to take any arrow, Wumi, is that cash trap calls arrows, you know, at intervals. So you want to take the arrow that is coinciding with what the currency strength meter is telling you. Because right now, USD is weaker than JPY. So we should be looking for a sell. So it's giving us an up arrow. We're not going to take a call. What we're going to do is we're going to wait for that sell. We're going to wait for the price to come to a resistance. Okay. And you know me, what the way I take my trades and the way you want to also start looking at it is, if you get, for me, for me, with my understanding with technical analysis, when I get 3 points, I'm good to go with that trade. When I get 4 points, all well and good. But I'm going to advise, if you can get 4 points, minimum of 4 points, then you can go ahead. The reason is because the stochastic and the RSI usually do not align when the trade is ready to go. Okay. Both of them are usually not aligned when the trade is ready to go. Okay. So if you don't get the stochastic and the RSI, leave it, no wahala. But the most important thing is your currency strength meter here, what the arrow is telling you. Then what is happening here is the trade, is the market at a support or a resistance, then you're good to go, right? More often than not, you're good to go. If you get the stochastic here now that I'm circling and the RSI giving you the cross up, cross down, then all well and good. It is an amazing trade, okay? So what we're basically looking for is this. Now, this is the stochastic, right? What we're basically looking for. So let me just change my color here so that when I'm circling anything, you guys are aware. What color should I use? Boom. Let me use this. Oh, this is dark as well. I don't want that color. Let me use yellow. Okay, good. So let me use yellow. Yep. So. Okay, good. Yeah, we're good. So what you're looking for, when you're looking for the stochastic, right, and the RSI, you're looking for a cross up and cross down. Okay, cross up, cross down for a sell. For a buy, cross down, cross up. Okay, something like this here, something like this here for a sell, like this here for a buy, something like this here for a buy, something like this here for a buy, cross out, cross up, cross down, cross up. For a sell, cross up, cross down, something like this here. That's what you're looking for. Okay, now having said that, that is for the stochastic. The same thing for the RSI as well. Okay, the same thing for the RSI. So if I come down to the RSI here, what we're basically looking for is, you know, cross up, cross down here, right? Here, this trade here, if you are taking this trade here, more likely than not, you probably need to have done rollovers, because when it crossed up, it didn't just cross down and drop the way it's doing here, the way it did here. Cross up here and cross down. You can see the way it dropped. That's what we're looking for. Cross up here, look at the way it dropped, cross down. But here, it consolidated a little bit around the side here. And that's what you're looking for a buy. Cross down, cross up, right? Cross down, cross up, cross down, cross up, cross down, cross up, right? That is basically what you want to be looking at, you know, when you are looking for the cross up, cross down, cross up, if you're buying or selling. But more often than not, the reason why sometimes the trade does not reach where you want it to reach and it reacts is because usually market will react off of technical analysis, support and resistance, which is floor and ceiling, right? Which is floor and ceiling. So for me, if I'm going to take this trade here, fine, we have different, you know, resistance here that Castrap is giving us. Right now, this place is a good. So if we are taking this trade from when Castrap called it down arrow, I want to believe that this trade will most likely would have cleared, because this dip here would have given us, let me check something on the 1 minute here. So good. Yep. So the trade would have cleared. And the reason why the trade would have cleared is this, right? Look at it. This is, I came down to the 1 minute chart. This is 1, 2, 3, 4. So when Castrap called this down arrow, when I was doing the explanation, I saw it, but I was like, okay, it's a training session, so let's just do the training. So look at it, it dropped 1, 2, 3, 4, 5. It dropped this trade, had cleared, boom. Now, but you may have been waiting for it, you know, a little bit above. So what you want to do is the moment you see the currency strength meter giving you the direction of what you need to look for, be it a sell or a buy, what you want to do is you want to come and expand the main screen here. Now, I'm noticing here that you see this area, you see this resistance here, this resistance here, and this one too was already forming a little bit. This whole zone now is giving us that this area here is a resistance, right? It's giving us that this area here is a resistance. So what you want to do is, before the trade happens, you want to come here, since you have already, you know, identified. Come, why is this thing not? Okay. Okay, I don't know why this thing is not responding, but anyways, so what you want to do is you want to carry your horizontal ray, right? If you come here, this second icon here, if you click on the arrow, you see horizontal ray, you want to carry your horizontal ray. And if you use the horizontal line, anyone that works for you, you want to carry it and put it where you have this resistance, this particular last one here, where it had touched before, because this one that I'm putting my line on, right? Let me thicken this a little bit. Okay, good. So where I'm putting my line, my horizontal ray on, you can see it's at 786.
Yeah.
It is higher than this one here, this previous resistance, but it's closer to this previous one here, which is what? Yeah, which is still within the same range that, okay, but as about if I enter at 786, if I put my horizontal ray at the previous one, which is a little bit higher, is 791, right? So 786 to 791 is not too far apart. It's just 5 points. Are you with me?
Yeah.
So you can take your entry at 786. More often than not, it might put you at a little drawdown, 791, but all things being equal, it should clear, because sometimes if you say you want to wait for it at 791, it might not get 791 because there's a resistance before it. So you can do 2 entries. You can split your order sizes. Say maybe your 3% is $15. You can put 5% at put $5 at 786. Then you put another $5 at 791. Okay. More often than not, even if you have to roll over 786, it's still going to clear. So with 2% on your account, 2% of your account on the trade, even if you have to do one rollover for each, you should clear. Now, the reason is because if you are waiting for the resistance up here at 814, it might not get there because there is a ceiling here. And if you look closely, the middle Bollinger Band is at the resistance as well. So here right now, if we get a down arrow here, what's the time? This is 7 minutes after. In another 8 minutes, if we look at the double blessing with the timing, if we want to add the timing to it, between now and 8 minutes time, we should get a down arrow. If we get a down arrow here, currency strength is 1, the down arrow is 2, this red resistance line is 3. The middle Bollinger Band stroke, the upper Bollinger Band that it is touching is 4. That's 4 points for you. Okay. Now, if you now get your RSI doing your stochastic doing a cross up and cross down, ooh, all well and good. You get the stochastic also moving its way up, doing a cross, sorry, the RSI doing a cross up and cross down, all well and good. So that's going to be 4 points here already, 5, 6-point trade. Right? As a matter of fact, if it comes to the quarter time frame, which is maybe 15 minutes after the hour, then that's like 7-point trade for you. That's how you want to count it. But for me personally, if I get 4 points, I'm good to go on the trade. Sometimes stochastic and RSI might not get to this point. If it doesn't get to this point, if I see that the trade is good, it's a good setup, I take the trade and I'm done. Right? So first things first, we want to look at the currency strength meter. You want to look at what the RSI. So right now it's giving you a call. You're not going to take the trade. You're going to wait for the trade. So our entry on this trade is at 786. That's the first entry that we're going to take this trade. If you want to take this trade. Now, if the market pushes up, sometimes you take a trade and you find out that the market is doing what? It's pushing up, it's going up, right? Anytime the market is going up, you want to look left and see what is happening. Because basically, what the market does is it repeats itself. It's repetition. Whatever's happened before in the past is going to come to happen in the future. So you want to look left and say, okay, come on, these first trades that I took here, it's putting me on drawdown. I probably rolled over twice. So how do I minimize my lesson? Look left, you would find another resistance somewhere. That's where you should take your next entry. Are you with me?
Yeah.
Are we together, guys? Is it making sense?
Yes.
I'm going to take it. Yeah. So you want to look left. So if I look left, if this market keeps pushing up, maybe I take it at 781. I take maybe I have $500. I put 1% at 781, which is $5. I put another $5, which is 2% of my account at 791. And I've rolled over and it keeps going up. What I'm going to do is I'm going to look left. So if we look left here, you will see that there is a resistance here. There is another one here. There's another one here. So with that being said, I move on this. If I put my horizontal ray here, boom, right at this resistance here, 813 and above is my next entry that I will take the trade. And you see this thing that is happening here? Did you see the way these candles fall? 1, 2, 3, 4. This is 5 minutes chart. For 20 minutes, this trade fell, it tanked. So if the market does the same thing, if it breaks this resistance here, if it breaks this ceiling here, and it continues to go up, my next entry is 813. More often than not, if I take this trade, I'm not even going to fret a little bit because it's going to clear more often than not. You see this drop, this 20 minutes drop here, the same thing is going to happen here. It might not drop for the whole 20 minutes, but your 3 minutes is going to clear. Or if you have to roll it over one more time, it's going to clear. That's the way you want to take your trade. And at this point in time, if you look at it here, you will see that if you still have your USD weaker 1 point, you see this is a resistance 3 points. more often than not, your upper Bollinger Band will still be here as well, which is going to give you 3 points. The down arrow, 4 points, right? Then if you now get your stochastic, you know, cross up, cross down, all well and good. But if you don't get a cross up, cross down here, no wahala. Take the trade, you will clear. Okay. You understand what I'm saying? So sometimes for me, when the educators take a trade, you want to get to that level when an educator calls a trade, be it on a Go Live platform or maybe, you know, our leaders in the team. When they call out a trade, yeah, they've done the analysis. When they are saying, okay, we're going to take a trade at 780 something, we're going to take it at whatever, we're going to take it at whatever. So look at it, right? And say, okay, go, that's a good point. You take the trade. Now, if the market is now putting us on drawdown, you would know as an individual, based on the practice that you have done, that this trade, if I roll it over 2 times, is going to clear. Okay, this trade, even if it does not clear, I'm going to wait for it at the upper resistance and I'm going to take it there and make back the money that I've lost here, or let me even break even. That's how you want to look at the market. That's how you want to be trading. Okay, so let's take a look at another currency pair to see. It's bank holidays today, so we might not be seeing. So you can see even from the currency strength meter, you know, the live co.uk, USD is way weaker than JPY, right? So if I take a look at this and see. So sometimes you also want to look at your, you know, your regular trading view is going to also help you. You know, cash trap is a guide. Once I don't see the setup for cash trap, then I say, you know what, let me go and also see what, you know, trading view is doing so that I can have more confirmation. So just from looking at this already, I already know that this zone here like this that I highlighted is a sell zone for me. Why? Because why is it a sell zone for me? This is a pivot, 1. This confirmed this area, this second touch confirmed this area as a resistance. Market dropped, came back up here, third touch, it has dropped. More often than not, if market comes back to this area, it's going to react off of it. But sometimes when you wait, the market, from what I'm seeing here now, before this market comes back up here to this zone, this, put a horizontal ray here, 791, right? Cash trap, what did you put as the price? I think I did put in 788, right? Somewhere around that zone. Yep. So you can see 788, 791, still within the same range. Now, what I'm seeing here is that this market can, before it to come back to that 791, is going to push up here, touch this area, and drop. So because of this resistance that this thing is forming here now, and we have our, you know, as they call it, super trend, but it's the 200 EMA moving average. What that tells you is it's the average of the last 200 candles on the particular time frame that we are in. So 785. So if I'm going to take a trade here, I'm going to take my first entry at 785. I'm going to take my next entry at 791. So with that being said, let me look at the charts and see. So you see, we've got Euro news, bank holidays, you know, Euro Canadian bank holidays, USD. So my timing here, every other thing looks good. So what I do is I come here and put an alarm here. Boom. I put it way before my entry so that if it triggers, I can go and do what? I have enough time to go to my broker, set my timing and take it. So this is 785. Oh, this is 115 already. We're at the quarter time frame. So this market might begin to reverse at any moment from now. So another thing you also want to take note of is, fine, we look at the timing, we take trades at the timing. Sometimes during the timing, the trade might not have set up. So if it doesn't set up during the timing, there's no point taking the trade. Okay. This is 5 minutes. I'm not getting anything serious. This is 3 minutes.
What timing should be looking at?
Say that again.
I said, what timing should we be looking at? Should I be looking at?
So you take your trade when you see your setup.
Okay.
So it might not be at a particular hour time or 15 minutes or 30 minutes, but usually market usually makes that turnaround within those time frames, right? At the 30 minutes hour time frame, right? If I put my cursor here, this thing started making its way from like 32 minutes, the half hour, it dropped, right? If I come back here, okay, this one didn't work. So when you look at, so when you practice over and over again, so you can see, you see my cursor here, this one, this is at the 44th minute, right? At the quarter hour, it started dropping. It started dropping at that level. So market usually react. So if you have your resistance and your support, let me log into my broker because I'm liking this USDJPY. So more often than not, when you see what price has done before in the past and the timings and where it has reacted off of, you want to take the trade when the market comes down to that zone. If it works with your timing, all well and good. If it doesn't work with the timing, then you don't want to stress yourself. Okay, you wait until market gets there. We always wait for market to come to us. That's why they say, the patient trader makes the most money. So this USD JPY, I'm looking at 785. So if I log in here, so let me set my 3 minutes. So let me just put less than 1% of my account. I'll just leave it at $10. USD JPY, since you have news and all that. Sorry, since it's a bank holiday. So 780, right? Oh boy, this thing is dropping already. Okay, this 780. I'm looking for 785, worst case scenario. 785, we'll take the trade for a 3-minute sell. So as time goes on, I'm also going to show you some things. There are certain things when you see on the chart, especially when the market is also forming resistance at some areas, it's telling you that the market is finding it difficult to break those areas as well. And you can see the way the market is moving. It's moving very sluggishly because there's a bank holiday today, public holiday in some parts of the country as well, and parts of the world. So what you want to do is you want to be careful. If you want to take a trade, you put in way under your 1% if you have that account. So not pushing up 777. Boom. So look at the drop. So that's what I was expecting, right? But okay, that's it. That's it. So if it had pushed a little bit further, so what I was trying to say is, you see, when the market is forming resistance like this, it's finding it difficult to push off of that area. And if you are waiting for the trade to come to a certain level and you are at the hourly, the 15 minutes, the 30 minutes, the 45 minutes, and the market is close to where you want your entry to be, what you can do is you can break your order size into 4 places. You can even use less than 1% and just throw it in there, so that way the knowing is in the doing. More often than not, you begin to understand how the market moves. And that was why I said earlier that this market, normally, this is going to be my preferred sell area. This area here that I highlighted, this is my preferred sell area. And if I put a horizontal ray there, I'm looking at 791. But I said that looking at what I'm seeing here, this market might not get there. It might come to this area, 785, and drop. Now, it did not get to 785. Look at the drop. This trade is a clear already. You don't even need to do any rollover. Just look at the drop. So if it was like on a good day, I was trading, I wasn't training, as I saw that the market, we're at 115, we had 15 minutes past the hour, I'll take an entry here with the expectation that if it comes to 785, I'm going to take another entry. So sometimes the market might not come to the exact price that you want. This is 780. 80 to 85 is just 5 points, right? So I can play around with it. I can take my first entry here. If it comes 785, I take another entry. Now this market has dropped. It didn't even get back to 785. So these are part of the trades that you may lose. Sorry, you may miss. And the reason why this market did not get up there is because from here, you can see from this zone here, from this area here, that the market dropped. It came back here. You see this wick here. Anytime a market wicked here, it's a false movement. Market tried to stay here, but the sellers were more powerful. So it got here and dropped, right? Came back. So where you want to see where the body of the candle is stopping at. So, I mean, if I wanted to go a little bit advanced, then I'll be looking, you can see that I just put my horizontal ray at the body of this bearish candle, this bearish engulfing candle. It's at 780. So what did the market do? It came to 780 and did what? It dropped. So if we are taking this trade, we would have cleared by now because it got to 780, 1, 2, 3, 4. 4 minutes afterwards, the market up. Now it's pulling back to that area. So this area here, this zone now has formed another mini resistance. Boom, the 780 zone. And that's how you want to start looking at your chart, because Cash-Trap had already, given us that idea that, hey, we should be looking for a sell somewhere around here. Cash-Trap, I saw there was a resistance here, there's a resistance here, there's a current resistance here as well. So the market, I still saw a down arrow earlier on, but I needed us to understand what I was showing us. So the market is pushing back to that level. So 7:30, another 7 minutes, in 7 minutes time, we'll get into the half hour. Let's see what happens. This market is back to this zone. It's at 777. So because it's at 777 now, this is not a good place to take the trade because it had already reacted off of a particular zone. And anytime you see that market is knocking on an area, it's just like you knocking on a door. You go there, you hit the door the first time, it's not opening. You go back, you hit, it's not opening. You go back, you bang, it's not opening. By the time you go back there the fourth time or the fifth time and you bang, that door might probably drop down because more touches within an area in the market, be it a ceiling or a floor, would make that place to be weak. So sometimes when you've seen multiple touches, you also want to be careful at the same time. But all these things, you get to understand it better when you begin to take trades. All right. So from what I'm seeing here, the market might come back up here, still react off of this place and go down, or it will come here, push up. It will continue to push up. So if it's pushing up like this, you want to do what? You want to look left. What am I seeing on my left-hand side? Am I seeing any resistance? Oh, yes, I'm seeing. There's one here. There's another one here. There's another one here. The same thing you will see on Cash-Trap as well. So if I come to Cash-Trap, that movement that you see that I just broke down is this zone here. This zone here that you're seeing. That's the zone. So if the market comes back up, pushes up, it gets to this zone, boom, we'll take it for yourself. So at that point in time, so this is just normal support and resistance I'm showing you, right? But when you see the down arrow, you look at the currency strength meter, yes, the US is weaker, it's giving you a down arrow, it's touching the resistance, it's touching the upper Bollinger Band, you get it to 4 point already. But you see this market has dropped 3 times from when I started analyzing this thing. But what are we seeing on the stochastic? It has not gotten to the overbought area to do a cross up and a cross down, do a cross up and a cross down. So if you are waiting for these two to give you confirmation before going into this trade, you've missed 3 trades that ordinarily you'd have done your 2 to 5% and you're done trading for the day already. It's as simple as that.
That has been my challenge. I've always been waiting for it.
Yeah. So look out. So can you guys see what happened again? I told you that the market might do what? Come to this area, react off of it, and drop. That's what it did. See, it came here, it reached this area, and it dropped. So if I come to the broker, what did the market do? It came back to where? 780. You can see it came back to 780, and what is dropping? So you can stay on one currency pair. Once you see a good markup on the pair, just stay on that pair and just wait. Once you see your confirmations, 4 points minimum, then you can go in and take your trade. So this kind of trade, even if you take it and the market does not give you, maybe maybe at the last minute, it spiked you out, you experienced the lesson, you won't feel bad because you did all due diligence. You followed your confirmations and you took your trade. All right. But more often than not, 70% of the time it's going to clear. So that's about that with USD. This is really a good setup, right? It was just acting funny here, this area here. That's why I didn't like, let's take the trade. But look at it. Said this was 780. It dropped, came back there. 780 dropped. Now it's coming back there. So you can see that 780 is touching 780 multiple times. So the next thing that this market will do is it will push up and come to the next resistance that is available, 785 or thereabout, and it might drop from there. So what I'm going to do is, since I'm just risking less than 1% of my account, I'm going to do what? I'll take a 3-minute sell. And let's see. So did the broker put me in? It did not put me in. So anytime you take a trade and the broker does not put you in, it's trying to make a decision. You can see it pulled up. It's going to 783. It's going to my 785. So if the broker does not let you in, chill and wait. Let the market make a move. You might make a move up. You might make a move down. If you make a move down, that means lower than your entry. You wait for it to push back up. So it came to 782 now for me. So you see it's going up, 784. So the next zone here is 785 that this market is supposed to get to. Then most likely drop. This is 784. Is at 784. Let me take another entry. Okay, so good. So with these two entry now, I'm good. I can do rollover. I don't mind doing rollover, right? This is like, these two entries like 1% of my account. So I'm good. I can do rollover. And what I'm going to do is, if the market continues to push up, where is going to be my next entry? This is going to be my next entry. Here is going to be my next entry. Boom. So I'll put a horizontal ray and do like this. 790. So 790 and above will be my entry. I'm going to set my alarm here. And look at what this market did. Did you see the way it tanked?
Oh.
So that's how you want to mark up your chart and take your trade. So let's see what happened. And the reason why I took that trade, so sometimes I said, during the time frame, you can see we are 1 minute away from the half hour. But this market made its move before the 30-minute half hour mark. So sometimes it's not you won't get the exact number. So you can see it's pushing up and down, right? No wahala, let it do what it needs to do. Worst case scenario, I'm going to roll over, but the market will still drop, right? So sometimes it might not be up to the 30 minutes mark that the market will move. From 29, it might begin to move. So what I'm going to do, I'm going to roll over. I'm going to roll this over one more time. So good, it's going up. So I'm glad this thing is happening here. So you guys can see how you can manage your trade. So you can see this bullish candle now is going up. It's pushing up. If this market pushes up, it's going to push up to like 790. If it pushes up to 790, it's going to drop. It's going to drop more often than not, because this is what has happened before in the past. This is 1, this is 2, this is 3. It's coming back here to do the needful. So I rolled my trade. So I have until, I have 3 more minutes on this trade. So I'm still in profit right now. So I'm good. So if you don't over leverage on your account, you will more often than not have a rest of mind. And if the market is, putting you on a drawdown, you will roll over, you will not panic, you will not do anything unusual, you will not over leverage, and the trade will clear, right? So look at it. It came up, pushed, it wicked here. So it wicked here, just the way it did a wick here, and it dropped. So with what it did now, it might not come back up here again. It might stay another 5 minutes before it comes back up here. And if it does come back up here, I will roll over the 2 trades that I put in. So if I roll over this trade one more time, I'm still good. I've not used 2%. I've not used 30% of my account. What I'm now going to do is I'm now going to come and take another entry. I'm going to double up at 790. Anywhere, if it comes to 790, all well and good, I'll just double up there and I'm good. I can even put 3% there, right? I can put 3% there and I'm good. More often than not, the trade is going to do what it needs to do. So you can see it pushed back up, and all that. So it came to 787. And look at it. Can you see the drop? So even if I had not rolled this trade over, I would have cleared by now. but you want to give yourself more time than not to have, time at all. Yeah, so that's what you want to do. So when you analyze your market like this, you will just take your trade with ease. You take 1 or 2 trades, boom, you're done for the day, right? If you take 3 trades, boom, you're done for the day. Some days might be making sense. Once you might come into the market and take 3 trades and you're good, you made your 5%. What you want to do is, if you must take any more trades, you want to lower your order size and play around with it. Maybe you want to learn some things. You put in like $1, you can put it $2 or thereabout. Or if you have 2 accounts like me, once I hit my daily target on one, I move to the smaller account that I can take more trades. Even on the smaller account, I don't over leverage. I just do it so that I can grow that one, consistently as well, just to let people know that, yes, you can start with a small account and you can also make money. So I'm ending in 33.44. So I have like 1 minute and 10 seconds on this trade. Yeah, so that's how you want to analyze the market and take your trade with ease. Okay. So with Cash Trap, if I come back to Cash Trap, you can see Cash Trap still called the down arrow as well. So, Cash Trap already gave us the move here too as well. I'm pretty much sure when this market pushed up to 787, Cash Trap had called that put that you're seeing here right now. This put that you're seeing here, but you did not get a cross up, cross down, cross up, cross down. But of course, you would have gotten your what? Currency strength meter, 1 point. Arrow, 2 points. Resistance, 3 points. Upper Bollinger Band, 4 points. And you're good. So I should clear in 10 seconds. So is it clear?
Yes, sir.
Yeah.
Sir, I want to ask.
Yeah.
Setting is what and resistance.
Yeah.
Where is the best part? Is it supposed to be at the wick or at the body?
Oh, very good question. So guys, I just cleared this trade.
Congratulations.
Right? For the $1 payout. Thanks. So that's how you want to take your trade with ease and you're good. No stress. It's so simple that once you understand the psychology behind it, you're good. And that's why Cash Trap is the bomb, right? Just look at it. It gave you the down arrow, it gave you everything you need to look for. So your own is go there and wait for the trade to come and meet you. Okay. So your question, very good question. Let me remove all drawing tools. Let me expand this. So if you want to do your support and resistance, it all depends on what you're seeing. So that's why support and resistance is a zone. It's not like a particular point. It's a zone. So as long as your zone is not too wide apart, then you're good to go. Remember, I said that, based on what we are seeing here, that this zone, here. Okay, so I said that this zone here, because of the multiple resistance I'm seeing here, this zone here is an entry zone. Okay, so this zone here is an entry zone. So it could range from range from 786 to 791. So what you want to do is you most often than not, you want to use the body. The body of the candle is what you want to use. First thing first. But if you notice that there's a wick, the wick is touching a particular zone because the wick is telling you that the market struggled to get to that level. It did not touch that level. It just touched the level a little bit and it dropped. So it's a false push, and where the body of the candle is starting from is where you most of the time want to put like your first entry at. So what I'm trying to say is this. I come here. If I come here, you can see that this whole area here now is looking a little bit choppy, right? Looking a little bit choppy. So when you see things are choppy like this, just stay away from it, except if you have that, you're an advanced trader and you can analyze and take the trade, okay? The main focus that you want to look at is look at here, look at here, look at here, and more often than not, this market will break this place, come to this area here, and come back down. So if we want to mark up the zone here now, what you want to do is you can see that there's weak. Okay, so let me do this. Let me expand this for you. Okay, so I'm staying here. This is the 1 minute chart. I'm staying on the 1 minute chart because sometimes on the 5 minutes, you might not see some things clearly, depending on what you're looking at. It's always good to mark up your support and resistance at a higher time frame anyways. That's the best part. The lower time frames usually kind of fluctuate, but this is high frequency, so we'll trade on a lower time frame. So this is 5 minutes, so I'll mark it up from 5 minutes all the way down to the 1 minute. Let me see if I can see anything on the 15 minutes. Okay, so on the 15 minutes, if I have to mark it up on the 15 minutes, then the zones might be far apart. But on the 15 minutes, because I'm seeing a pivot here, right? So I can come and do what? Put a horizontal ray here. So you can see the body. Look at the body. The body is starting from, the body of the bullish and bearish candle is starting from 822, right?
Yeah.
The wick, I can see the wick is at 827. So if you want to take the trade here, this is your zone. This is your entry zone. Your entry zone is going to be between 822 to 827. Okay, this is 15 minutes. Now, I'm seeing another bearish engulfing candle here. When we say engulfing means that the candle to the right is bigger than the candle to the left. It is engulfing it. It is covering it. All right. So I might come here and put another horizontal ray here at the body of the bullish and the bearish candle. So if I do that, boom, I have 808. Okay, good. So more often than not, the market will come to this 808 area and react off of it before it goes to 822 or 827. This is a 15 minutes chart. All right. So let's come down to 5 minutes. So if I come down to 5 minutes, you can see that this zone, this area here, this pivot point that I marked for 15 minutes is good, right? This other area that I have my horizontal ray at 808 is another zone. So I can come and adjust the zone on the 5 minutes for this 808 that I have on the 15 minutes. I can easily come, I can either leave it there because of this bearish candle. I'm going a little bit advanced here, but just get the idea. As time goes on, I'll break it down some more. You would understand when you begin to take trade. So I'm going to leave it that way. I'll leave it that way for some reason, because I don't want to put a horizontal ray here. This at 818 is close to 822. So so this is 5 minutes. Okay, so the market will take some time to come up here. You are 777. So if I want to mark up from the 5 minutes now, I can see here, okay, this is a point, this is a pivot point, this is another pivot point here, this is another one here. You can see that it is wicks that I'm seeing here, wicks that the body, wicks at the body. So we can get another zone from that area. So what I can do is I will take my horizontal ray, I'll put it up here, boom, at the body of the bearish and bullish engulfing, bearish and bullish candle. Okay, so this one horizontal ray that I put at 791 is taking care of the wicks that are touching this place too as well. So I don't need to put another one at the body. Now, if I come, so 791 is an area to take this trade for itself. But remember, we took it at 780 and we cleared, we made money. The reason is because you always want to come down to the lowest time frame possible to see things better. Because sometimes, like you rightly said, the market might get to a zone, it might not give you, it might not get to where you want it to get to, and it will do what? It will do what? It will drop. So I'm not supposed to confuse you guys with these moving averages. Sorry about that. But of course, the cash trap has the 200, exponential moving average. So this is a 1 minute chart. Okay. So this is a 1 minute chart. So if I want to get an entry zone, so I don't even need to put an entry on the 1 minute again, because from the 5 minutes, this 791 is good. The reason why 791 is good is because It's touching this pivot point here. It's touching this pivot point here, which these two here is confirming this area as a resistance in the past. Okay. Now, the market came, it didn't get to these areas, but it dropped. The reason why the market dropped is because if you look closely, as time goes on, your eyes will be trained. If you look closely, I see a pivot point here where the bearish candles dropped off of, right? So if I come here and I put a horizontal ray, boom, I got 786. Okay, I got 786. But remember that these are resistance. These red lines here are mini resistance. Okay, so you see the market came, market came here, market came to this area, it dropped. This drop is highly significant. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10. For 10 good minutes, this market dropped, it tanked. That's to let you know that if the market comes back up to this area, it's going to do the same thing. It might not drop for 10 minutes, but it's going to drop for some minutes. What did it do when it came back there? This bearish candle was once a bullish candle like this. It came up here, wicked it. It came up to 785. And this area that I put here was 786. So that's why I said, if you have 5 points, 3 points, 5 points and below is good. Worst case scenario, you take a double entry. Okay, so the market dropped 1, 2, 3, 4, 5. Another good 5 minutes, the market dropped. Before it did what again? It dropped, came back up, touched the same 785, and did what? Dropped. 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15. Almost 20 minutes it dropped. So that gave me the confirmation that this market might not get to 791 that I initially drew. And I said that at the beginning of this training call. So it dropped, played around, came back up here. You see, it came here. I took the first entry where? Here. Took the first entry, 783 or thereabouts, right? I took it at, where's my result? I took it at 783. It came up, it pushed up a little bit to 787, and look at what happened. It never came back up there again for 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 11, 12, 13, 14, 15 minutes, it tanked. And that was what I did here. So if I come to my closed trades here, this is the 2 trades that I took. I took one at 782, boom. It pushed up, I took another entry at 784. Because I'm good, I splitted my 3%. As a matter of fact, I didn't even take 3%. I splitted my 1% in 2 places. And I took into consideration rollover. Why did I take into consideration rollover? Because I know that because I have previous, I have an area at 786 and 791. Market might do what? Might push up. So I'm good to roll over even 2 times, worst case scenario. But if it comes up to my 791 and it did not react off of this area, then I would confidently put 3% of my account at 791. And over 80% of the time is going to clear. So even if I don't clear these first entries, this second entry that I'm going to be putting, or the third entry I'm going to be putting in, would clear, and I'm going to make my money. I'm going to make, if I don't make all the money, at least I'll cover up for these 2 other sizes and I'll be a little bit in profit. But what happened? The market dropped and the 2 trades cleared. So that's how you want to look at the market. So it's a zone that you want to look at. Depending on what you are seeing, you can just put one line there. Boom, 782, it came, it pushed up a little bit, right? Or it might be a zone that you're looking at. So at the lower time frame, you might just look at maybe one, just put a horizontal ray and have like a range. At the higher time frame, maybe like 5 minutes, 15 minutes or thereabout, you want to look at a zone, because that zone is what you want to play around with. And once the market comes there, so you can see the 200 moving average is telling you that we're on a downtrend. You see, came here, touched here, dropped, touched the 200 EMA, drop, touched the 200 EMA, drop, came here, wicked the 200 EMA a little bit, dropped, came back here, wicked the 200 EMA again, and dropped. So this is an indication that this market will continue to go down, all things being equal, at least for this time frame that we are in. except otherwise, something happens, the US dollar is now stronger than what? The Japanese yen. And cash trap has given us everything. USD, JPY, the market is still what? Dropping. USD is still weaker. Where's USD, JPY? Where's USD, JPY? Okay, so I think it's just, let me refresh it. So that's it, USD, JPY. Okay, I think the market is refreshing anyway, so that's it. So that's how you look at it, right? Is that clear enough?
Yes, sir.
Yeah. So the more we go over it, the more we get to do it, the better the understanding. But more importantly, you also want to practice. Okay. So what you have learned, you put it into practice. Go practicalize it on your demo, and you will begin to understand certain things, and it's going to be clearer. Oh, beautiful. So we meet 2 USD JPY, she cleared too. So
Wow.
that's the way it is. You just take your trade with ease. No stress. You don't need to stress yourself, and you're good. Anyone that clears, fine. If it doesn't clear, no wahala. Okay, like just let it go. So like see Euro JPY now. You can see just from what I'm seeing on the chart here. You see this zone here. This zone is a sell zone. Look at what price did. Did what? Dropped, came here, test, dropped, came here, played around a little bit, but finally still dropped. So here you might probably have done 1 or 2 rollovers or thereabouts, but the market will still drop. But when did the market start dropping? It started dropping at the hour. You can see at the hour, it dropped. It came back here again, and look at it, it is dropping. So once you see these moves over and over again, Euro JPY, let's see. Euro JPY, okay, Euro is a little bit stronger, but sometimes technical analysis, there are ways that you can trade against the currency strength meter and you're still going to be good. But I mean, for starters, let's just follow the instructions. Look at your Euro JPY, look at your currency strength meter, look at your arrow, mark up your chart, wait for the arrow. Is it touching the resistance area? Is it touching the upper Bollinger Band? And if you have at least 4 points, then take the trade. You should be good to go. All well and good. You get the stochastic and RSI, and then that's an amazing trade. You hit it and you're done. Okay. So so because of time, I have another meeting now. We'll end it here. And if you have any further questions or anything, let me know, and we will treat it. So what you also want to do, maybe you take a trade, you analyze a chart from cash trap, you looked at it on TradingView, and maybe it probably didn't do what you wanted it to do, or you need more clarification. You can always come here, okay, come to the top right, close to publish, click on it. You're taking a snapshot, copy, okay, then you can send it to yourself via email or whatever, then send it to me, so that if I click on it, let's say, for example, now if I put it on the chat box here, it's sent to me. Once I click on it, it's going to take me to the chart itself. So you can see it's going to take me to the chart itself, and I can see what happened. I can see what you're doing. I can always go back. So just make sure that you have your horizontal array to show me the, so what I mean by that is this. Make sure you have this, either your vertical line or horizontal line, to show me the entry. To show me the entry that you're looking at, the zone or the entry. So here I'll set 892, 898. So if I do this and I copy this, I drop it on the chart. There's the chart box. I drop it on the chart box. I click enter. So if I get it, once you send it to me, maybe on WhatsApp or anything, I'm going to see it. So once I see it, okay, I know that the zone you're looking at was between 892 and 898. I can always come back to the chart. Okay, I can always come back to the chart. All I need to do is put in the coordinates, and I can look back and kind of see, okay, why didn't this trade clear? Why did it clear? What happened? Blah, blah, blah. And like I said, look at the Euro JPY is clearing already, you know, with this same resistance zone. It's dropping already. Okay, so yeah, so that's about that. And any final questions?
You've answered the main one, because the main challenge was actually the stochastic and RSI, because whenever I see the point, that is the strength, the type,
Okay.
and at the support or resistance zone, and
Okay.
also maybe within the green Bollinger and the red Bollinger.
Okay.
When I don't see any crossover
Mm-hmm.
at the stochastic or RSI,
Mm-hmm.
I won't enter a trade, and I'll now later realize that the trade now later goes.
Yeah.
But the stochastic and the RSI did not react.
Yes.
They were at times they didn't even get there.
Yeah, absolutely. It's because there is a resistance somewhere that the market is fighting off of. Sometimes if you don't see that resistance in that area, or you don't see the support, there's no point of, you know, having any FOMO, which is fear of missing out. It didn't just get there, it didn't just get there. But if you look closely, you should have a resistance or a support at the area that the market is doing what, that the market is reacting off of. Look at what Euro USD is doing now. Just like what I showed us here on the chart itself. This is Euro JPY. This is Euro USD. Yeah, so if we look at Euro USD now, okay, because this had happened in the past year, we may not have seen all these things, all this area here that had happened in the future, right? So, but what you want to do with this kind of trade is, now that you're seeing that there's there is a pivot point here, what you want to do is you want to get that zone, like we always say. So if everything is going in the direction of Euro is weaker, but in this situation, Euro is stronger. So we should be looking for a call, not a put. But in terms of the zone, to answer your question, you just put it here, from this area here, you drag it, this is a zone, right? And that is why when this market from here dropped, it came back here. It did what? React off of it, it dropped. Now it came back here and this market is dropping. So this candle itself that you can see has 51 seconds left to go. So if you had taken this trade here, 169, the market is at 160. Well, this is a close one anyway. The reason why this is a close one is because when you look at the currency strength meter, Euro is stronger than USD. So you don't want to take a sell here. You want to take a call. You want to take a buy. So in this situation, don't go against the currency strength meter, because if you're not yet advanced, then you might end up, you know, just dashing the market money. But if you look at it, this is an uptrend. You can see this is an uptrend, because from here, this is forming a lower high. This low is higher than this previous low. Came up, came down. This low is higher than this one. So it's forming lower highs. So now it has come up here. It's going to come down to this area, most likely touch somewhere here and go back up. Okay, but you would understand these things as time goes on. No, you can't take it at resistance. If you want to take a buy at resistance, you need to wait for, you can take a buy at resistance, but break and retest. Thank you very much. So this is the resistance here. So with this resistance now, we have something here, right? Like this. So let me remove all these things. So this is the resistance here. Boom. So if you want to take a buy here, what you want to do is you want to wait for a break, retest, wait for a retest, then you will now take it at the bottom here, which is going to give you anywhere from 166 as your entry. Going to give you anywhere from 166 as your entry to 173. So that's going to be your entry zone. So you wait for the break, retest, and take it up.
Okay.
Yeah, that's how you take it if you want to take a buy and you see something like this. Yes, resistance turn support. Yes, correct. Resistance turn support. So because previous resistance will turn support, previous support will turn resistance. So this market, the way this market is going now, so you can see By the time this market wants to tank, this is what you see here. By the time it's making its way down, depending on whatever is happening in the market, we just react off of the market. We don't trade against the trend. We just follow the trend and take advantage of the weakness and the strongness of one currency against the other. So what's going to happen here is this. If you want to take a sell here, if euro is now weak, you wait, this will break, wait for a retest, you take it there for it to drop here. Okay, and what can also happen in this scenario is it will probably come, break this place too, give you a retest, and what, come down to this zone here. So what it is doing is this area here is filling back the spot all the way back down. And if it will continue, so this area, from what I'm seeing, is a very good support zone. You can see 1, 2, 3, 4. So by the time the market comes back to this area, it's not just going to break it. This is a floor. This is a strong floor from what I'm seeing. It's going to bounce off of this area and go back up. That's why you see sometimes when the educators are calling trade, they will just look at, okay, you know what? I like what I'm seeing here. Let's take Euro USD for a 3 minutes call. And guys, let me tell you how you know how many minutes you want to take for your trades. You see what happened here? Market came here, pushed up 1, 2, 3, 4. This is a 5 minutes chart. 15 minutes, market was up. It came back here. Look at this, 1, 2, 3, 4, 5, 6, 7, 8, 9, 10, 9, 10. 15 minutes, market was off of this area. Came back to the same zone. 1, 2, 3, 4, 5, 6, 7. I can go. For 1 hour, the market was up. It came back to this zone again. What did it do? 1, 2, 3, 4, 5, 6. 30 minutes, the market was up. It came back again. 1, 2, 3, 4, 5, 6, 7, 8. Another 30 minutes and above, the market was still up. You can see just on Euro USD alone, 1, 2, 3, you can go 4, 0, 4, 0. You can do 10% of your account if you know what you're looking for. And that is why I can see why this market is now going up. It has touched this place. So if it comes back down to this zone, it's going to react off of this place again. So you can comfortably take this trade for 3 minutes. You can take it for 5 minutes. If you take it for 3 minutes and put it on a drawdown, you can roll over. More often than not, it's going to clear, except if there is a fundamental news happening. But before it's going to break this zone, it will react off of it at least before breaking it and going back down. That's how you guys want to look at the market. Once you see the, and you see when the market comes down to this zone here, what is going to happen is euro will most likely be strong, will now be stronger after being weak. Our stochastic and RSI, the stochastic will come down to be at overbought, cross down, cross up. This one will come down, RSI cross down, cross up. This trade will now become an amazing trade setup and you're good to go. It's as simple as that. Keep the simplicity in your mindset, keep the simplicity in your head, and just follow the rules. If you don't see minimum of 4, you don't see strong support and resistance, leave the trade. Look for another one. And you want to focus on maybe 2 or 3 currency pairs so that you don't go and, start looking up and down the place. By the time you come back, the market has moved, blah, 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 and all that, right?
So which one should we be focused on? Which one should I be focused on?
So it depends on you, right? It depends on what resonates with you. Different currency pairs resonate with different personalities. Like Matthew Taylor, he said USD, JPY, Euro USD, and Euro JPY. That's what he trades the most. USD JPY has made him more money than the other 2 currency pairs. Some people like to trade Euro JPY alone. Some people like to take Euro USD alone. Some people even like to trade Euro CAD, but be careful. The Canadian pairs, they know how to spike in an annoying way. Some people take USD JPY, USD CHF. Some people do NZUS. So some pairs, some people even go close. GBP, be very careful with GBP pairs. Okay. When those ones, once they hear go, then they hear come. So okay. if you have your analysis well and you're taking a GBP pair, all well and good, is sweet to take. But as a starter, you probably want to stay away from them. They're a little bit volatile. So I really don't, New Zealand, I don't trade them per se. So there are just a few pairs I trade to as well. I trade any pair though if I see a very good setup, but of course, Euro USD, Euro JPY, USD JPY. I do USD CHF too as well. USD CAD too, I trade it. GBP CHF, GBP CAD. I've been studying GBP CAD for some time now. Sometimes I kind of like the way it moves. Made some money off of it as well. So it really depends on what works for you, right? You want to just go through, and if you're trading any other pair, any new pair that you have not traded before, you want to trade it on your demo first of all. So if it works out fine for you, you might take more, closer look at the pair and get to familiarize yourself with it. If not, just do the needful and follow, whatever the educator is advising you to take, or which of the educators, be it the international educators or maybe the local educators, you understand? So if you do it over and over and over and over again, repetition is the key to mastery. Repetition is the shortcut to learning. So if you do it over and over and over again, it becomes second nature to you, okay?
Okay, please, on the chat, on the hourglass, why do you have two currencies?
God bless you. That's a good question. So the reason why you have two currency paired, like Matiteya said, is he always wants to see what has happened 5 minutes before. So the first one is the recent one. This one is what has happened 5 minutes before. So this one is what has happened 5 minutes before. This one is what is happening right now. So if you look at it, you can see it says 8 minutes ago at the bottom time, 8 minutes ago. This one is what? 3 minutes ago. So that's what you want to look at. So you always want to look at the first pair. That's what you want to look at.
Okay.
And thank you for that question. Anytime you want to take a trade, if you see it says 3 minutes, if you see it saying 4 minutes ago, that means that candle has 1 minute left to go. You don't want to take a trade in the middle of the candle. So wait for the new candle. So now it's saying 4 minutes ago. So I'm not going to take a trade now because I'll wait for the new candle to form. I'm on the 5 minutes chart. Every 5 minutes, a new candle is going to form. So you want to wait to the close of the candle. Then you now take another trade, depending on what you're looking at, be it sell, be it buy. Okay.
Okay, thank you.
Absolutely. So guys, look at what I said.
So
Dropped. Yeah, go ahead. Yeah, go ahead, Yomi.
I think she wanted to say something.
Womi, did you have a question?
What I just want to take from what you said is
okay.
Support and I should focus on the support and resistance at where the market reacted most.
Absolutely.
Am I right?
You're right.
Okay.
You're right. Yeah. So support, and because that's what CashTrap does. It identifies zones at support and resistance. So your support could be a retest of a previous resistance. Your resistance could be a retest of a previous support. Okay. So at the end of the day, we're trading off of support and resistance. And if we're having a trending market, which is going up, maybe into the upper direction, we're always trading the pullbacks. It goes up, it makes a retracement, you take it there, right? If it's going down, if it's a downtrend, market never goes in one direction. See, the market just goes like this, and just go like this, or it just comes down like this. No, there's always, the market does this, goes up, come down, goes up, come down, goes up, come down, goes up, come down, like this, right? Goes up, come down, goes up, come down, goes up, come down, like that. But if you look at it here, this is, so if I draw a line here, you can see that this support here was once a resistance. Are we together?
Okay.
Went up. So let me change the color of this one. Went up, came down, support, confirming this area. Went up, came down, support, confirming the previous. Went up, broke this area. Previous support, now resistance. Drop, pulled back, resistance, previous support. Floor, ceiling. Ceiling, floor. Floor, floor. Ceiling. Previous floor, now ceiling. Right? Previous floor, now ceiling. Broke, retest. Why is he retesting? Why is he reacting off of this place? Look left. Was once a floor. Drop. So when you see market like, so this one is a trending market that is what? Going down. The same thing with the market that is going up too. It happens like that. So you don't want to buy, you just don't want to buy anywhere. You want to buy at the previous resistance, right? This was this resistance. This is now this nice support. Okay. 1 minute, just give me a second here. I have a call coming in.
Are you still there?
He's on a call. He said he's taking a call.
Yeah, thank you very much for holding. Yeah, I got a call and I had to just quickly let I had to let them know that I'll call back soon. So yes, so that's how you take that's how you take buys and sells depending on what the market is saying, right? It could be trending up, it could be trending down, and that's why we have the cash trap slide. Is it the cash trap slides? Can you see my screen? Can you see the cash trap slide? HFS cash trap mastery. Can you guys see it?
Yes, I can see it.
Not sure.
Yomi, can you see it?
I see it.
You can see it. Let me. Okay.
Not yet.
Let me join from another gadget and see, just to make sure I'm seeing what you're seeing as well.
I can see it now.
You can see it now, right? Okay. So this is the cash trap stuff, right? And this is what Matthew Taylor, especially Taylor Marks goes through every Sunday. Okay, they tell you, they go through, they tell you the point system, the rules, the arrows, what you need to take, all these things I explained on the chart already. And look at it here. This is what I'm coming to. You see an uptrend. It goes up, come down, goes up, come down, goes up. Consolidated markets, you take up or down arrow. Downtrend, goes up, pull back like that, right? So this is it, an uptrend. This is resistance, support, previous resistance, now support, resistance, it goes up like that. Same thing here. So we have all the tools, everything you need. So you can see this is an uptrend. How do you take an uptrend trade? This is a consolidated market. This one is a downtrend that is, trending down as well. This one is just the currency trend meter explanation. Same thing here. Then the point system, right? Green arrow for up arrow, 1 point. Green arrow, 1 point. Currency strength meter, first currency strength, stronger than second currency strength, that's 2 points. Price at the green Bollinger Band, that's 1 point. Price at the support line, 1 point. Do you have a B at the stochastic indicator? Okay, I didn't go over this because sometimes you won't really see it. So these 4 points, this is the 4 points I tell you. For me, basically, when I see 4 points, I'm good to go on the trade. If you now see the cross up through the green line, stochastic, and the RSI, like I did explain to you guys, then you're good. This B here that you're talking about is what you can see here. That B is, you can see S here, right? You can see B, S and B. It's just telling you that, oh, the market is selling, the market is buying, right? That is basically what that means. What is it? Auto. Yeah, buy and sell. That's it. So, so if I come back here, okay, so that's it. Then for the put, it's just the same thing, but it's in opposite direction. So if the price is trending, blah, 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 I've already said all these things. So these are the educators. This is the creator of Cash Trap, Matthew Taylor. He trains this guy, and this guy is on Go Live right now. So because we are using this strategy with this strategy in conjunction with the timing from Ivan Cabral, that's why it's called double blessing strategy. So this is what we just want to focus on. We don't want to be up and down the whole place. And these two people are the ones that did the slide. Their sessions are very awesome. So you can always go to learn a skill from their session. Excuse me, and you're good to go on that. Okay, so Brandon Boyer and Joshua Lee, they were on earlier on today. And so you can see top 5 most viewed educators, all of them HFX, high frequency, over 200,000 views. Millie is cracking 300K. I mean, this guy yesterday, I was on his session. He called out 2-3 trades, cleared. I was on Machiteya session too yesterday, called out 3 trades, cleared. Oh, yesterday was so sweet. On a Sunday, you can imagine. So you don't want to miss their sessions, right? Don't want to miss their sessions because you learn some more. Okay, so this was the session. So you see, this is where he's going through the training slide I just showed you guys.
Okay.
After going through the training slide, then he's going to mark up the chart just the way I showed you guys. And
we should see a lot. It's about to gain a lot of strength.
Then we took a trade.
USD,
I know we took some trades.
It's just straight. This is gonna go.
So you can see this is a top trade called.
Happening, you guys. So,
he rolled over this trade 3 times.
Clear this trade. Type some dollar signs in the chat.
No, that trade.
Type some dollar signs. If you guys are brand
new, you can see the trade just cleared.
You learn something.
On a Sunday.
That's what this session was for.
Yesterday was just so sweet. Machiteya as well. If I come to Machiteya as well, Machiteya called out 2 trades as well yesterday. It was awesome. I mean, you know, just sitting down. I think I was even eating at that point in time. He called out the
take trades. You're in the wrong place.
At my chat as
because this is for learning. Today is.
So you can see. So he goes through the compounding.
You just gotta win 1 trade.
Just started $1,000 account. A month and a half ago, he's taking that $1,000 to 5K now. The goal is to take it to 100K. You know, 12 months from now. Because he's done it before, now he's trying to do it to come down to everybody's level. So you can see, they just teach you how you can use it. So you will get it directly from the source, how they get to
whenever I see that, guys, I always
to what the local team is doing as well. Then it's really going to take your trading game to the next level. Wait, let me see. This trader is so fast. I'm looking for where he called those trades out.
From your account, I was growing this 5 days of 250 night to make 200% of whatever you deposit.
So that's the trade.
Now,
he started with $1,000.
A bonus. Understand this, guys.
So he's telling you everything you need to know about the platform. If you take bonus, if you don't take bonus, blah blah blah.
Of course it is.
You know.
On a fast trap, it is either going to go up.
Where did he trade this trade? Yeah. So that's about it, guys. Any final questions before I move?
I'm clear already. Just need to practice right
so
now.
Yeah, so look at one of the trades he took.
Let me know if you guys
just took that trade, no rollover. Look at the drop.
In about 7 seconds. So I got about 7 seconds left of this trade setup. Boom, just cleared. Let me know if you guys cleared.
Easy trade. Okay, so in the absence of no questions, then yeah. Wumi, do you have any questions?
No, not at all. I'm just so grateful for your time. Thank you very much.
You are welcome. All right, guys. I'll see you guys soon. Yeah, we'll talk. Take care.
Okay, bye.
Bye.
Take care. Bye.
Okay, bye.